Hello, children. You are welcome to the digital classes of Christ Church Convent Higher Secondary School Gadarwara. This video is for class 12th. Subject is Accountancy. Chapter 13 Accounting Ratio Part 2. First, you should know the types of ratios. They are divided in 4 categories: liquidity ratios, solvency ratios, activity ratios, and profitability ratios. And further, they are divided. First, liquidity ratios. Two ratios are there: current ratio and liquidity, or you can say quick ratio. In solvency ratios, there are three. First, debt equity ratio. Second, total equity to debt ratio, total assets to debt ratio. And third, proprietary ratio. Third is activity ratios, in which there are 6: inventory turnover ratio, trade receivable turnover ratio, trade payable turnover ratio, working capital turnover ratio, fixed assets turnover ratio, current assets turnover ratio. Then in profitability ratios, there are 7. First, gross profit turnover ratio. Second is operating ratio. Third, net profit ratio. Fourth, return on investment. Fifth, earning per share. Seventh, dividend per share. And last, price earning ratio. Now we'll describe them one by one. So first is liquidity ratio. It means actually it is the capacity of an enterprise to meet the current liabilities. When an enterprise needs to find out short-term repayment capacity of the firm, then liquidity ratios are calculated. It shows that whether company is able to meet its short-term liabilities through its short-term assets or not. Actually, what happens? The creditors who are giving short-term loans or credit to the firm, they want to know whether they will be repaid in time or not. So it shows that an enterprise has an adequate amount of working capital, and this is very important for the point of view creditors and bankers. So as I told you, liquidity ratios is subdivided in two parts. First is current ratio, which is also known as working capital ratio, and second is liquid ratio. So first we shall study current ratio or working capital ratio. To find out this ratio, we need to sum all the current assets of the business, which is divided by the sum of all current liabilities of the business. So we get a formula for this. Current ratio is equal to current assets upon current liabilities. In chapter 11 and 12, you studied that current assets are considered those assets which can be converted into the form of cash within 12 months, and current liabilities include those debts which need to be paid within 12 months, यानी कि in the within period of 1 year. For your assistance and to make more understandable for you, there is the list of some current assets and current liabilities of a company you have to learn, without which it is not possible for you to work out with the questions. So I will read out those names first. Current liabilities are sundry creditors, bills payable, bank overdraft, outstanding expenses यानी unpaid expenses, unearned income of the current financial year, short-term loans and advances, unclaimed dividends, proposed dividend, and provision for taxation. So these are the current liabilities of a company. Then current assets: cash in hand, cash at bank, sundry debtors, bills receivable, stock, short-term investment and marketable securities, prepaid expenses, accrued income, and advance given. So this is the list. So it is very useful for you to solve a numerical. What points to be kept while you are calculating current ratio? So this is very important, because by using these points only you would be able to solve question. Okay, first thing, only those assets should be included in current assets form which can be realized in 1 year, and for the liability it is same, only those assets are included which are payable in 1 year. Then point number 3, investment are included in fixed assets, but short-term investments, marketable securities, they are included in current assets. Loose tools, patents, goodwill, trademark, and fictitious assets are not included in current assets. Then next is, bank OD is considered as current liability until and unless something else is not given against it. But loans and mortgage loans and bank loans are considered long-term loans and they are not considered current liabilities. So last point you must remember. Now we shall go with an illustration. You are given a question. First of all, you must write CL and CA against the heads. जैसे creditors, what is it? This is current liability, so you write CL against it. Outstanding salary, this is also CL in a current liability. Bills payable is also CL लिख लेंगे बाजू में. Prepaid expense, this is current asset, तो CA लिखेंगे. फिक्स्ड असेट्स इसमें नहीं आएगी, इसको छोड़ देंगे अपन. Stock, it is considered CA, current asset. Debtors, CA, current assets. And cash at bank is also current assets. नाउ इनको लिखने के बाद जब हमें टोटल करंट असेट्स निकालना है तो हम इनका टोटल करेंगे, जितनी भी करंट असेट्स हैं उनका टोटल 250, 75,000, 120 plus 5,000, it comes to 4,50,000. Then we'll find out total of current liabilities, that is 1 lakh plus 12,000 plus 88,000, it comes to 2 lakh. फार्मूला लगाएंगे करंट असेट्स अपॉन करंट लाइबिलिटीज़, तो कितना है 4,50,000 अपॉन 2 lakh, दैट कम्स टू 2.25 अपॉन 1, दैट इज़ 2.25 रेशियो 1. करंट रेशियो दैट इज़ आइडल, इट इज़ 2:1, लेकिन वी हैव 2.25 रेशियो 1, सो इट मीन्स the solvency position of the company is very sound. So on the basis of this explanation, first of all you solve all the examples and numericals based on current ratio. Then in later video we shall discuss some more. Thank you.